Hey guys, how are you? Casper here with a video that I haven't done ever, I think. I have a list that called ratios. A lot of various ratios between sectors, uranium, gold, SPY, a lot of weird stuff. And we will just go through every single one, more or less. If there's something interesting, we will dive into it. If not, we will go on to the next. I do believe I have like 40, so it can be a long video, but I try to, again, if there's nothing there, we will just go on to the next. And there is a very scary chart coming down the road at the end, by the way. Very scary. Um, anyways, you will find out what it is. But we will go through it. Very simple way to do it. There it is. Away with me. And the gold and silver ratio we will not do. We talk about that so often. Let's skip it. So the weekly, I will try to be on the weekly, by the way. Again, use the third weekly as a guide. The third weekly is a very good guide when it comes to the long-term trend, stage one, two, three, four. If you are a new guy to trading or investing technical trading, I would highly recommend keeping it simple. Use the weekly as your overall views of breakouts and all that, and go down to the maybe the 4 hourly or the 2 hourly to time the entry. It again, the weekly is probably my favorite one to look at because it just cuts out a lot of the noise. Anyway, let's go through them. Again, any questions and all that, comment below. Um, and yeah, let's see. This is a weird one. Have URA divided by oil divided by the spot price of uranium? And what the bleep does that mean? It basically means that if the oil price goes up, right, this fraction here becomes higher, and therefore the ratios go down. So this is basically a measure of how much money the URA, the companies, are making compared to what they put out of the ground. So overall, as you know, long term, fantastic. Beautiful chart here. Head and shoulders, boom, breakout, flagging into test of the neckline. Beautiful textbook stuff right now, and we're coming up from the lows here, meaning again, the miners are doing some good stuff here. And we do remember summer 2023, I think it was August, that was when we had a big run in the URA. If we backtest here, retest, and start to break out from the flag, we could have a good period going on for us. And this over here, by the way, was again, 2023, where oil just went ballistic off the charts, right? So we can't really use that as a measure because it was so extreme. But yeah, the miners and Cameco and all these guys, they are making money. That's good. URM divided by Bitcoin. Again, I have a lot of weird stuff going on here, so take it as you may. Um, only like a 4 or 5 years, and we're trying to break down here in favor of Bitcoin. We have the wedge pattern going on here, which is actually quite textbook. So hopefully this little pause here, or like a very narrow range, we could do that, and we will have a good period again for URNM. It's always nice to outperform the big guy, right? The best performing asset basically for 10 years. So let's see what happens here at this cluster. It has been basically doing nothing for like half a year, and we have the three impulses that we like. That would be extremely nice. Let's see how it goes. URA divided by the Nasdaq. Again, we try to break that so many times. Look at the ceiling right there. It just couldn't. It just couldn't break through. Massive bear flag, puke, bear flag kind of thing, puke again. So we have the three big impulses, right? Um, and until we start to break the yellow here, that channel, and basically get above 0.002 here, until then, the Nasdaq is highly in favor. It's still, I mean, the URNM is still trending down in relation to the Nasdaq. SILJ, the silver juniors actually compared to the the URNM divided by the silver juniors. Pretty banging uptrend, right, in favor of URNM. And we hit it here, perfection. Boom, there it is. So basically since February 2024, the URNM has underperformed massively versus the juniors of silver. Basically, wow, that's actually quite a big move, right? Down 64 at some point in time, now only 60. So in order to uranium miners to be better than the SILJ, we need to break out here, getting above the 30 weekly moving average and break that one there. Until then, the longer term trend is still in favor of the juniors silver. URNM divided by SPY. Same thing applies again against the Nasdaq. We have that trend channel which we need to break. Until then, the SPY favors is favored over URNM. We have the three impulses, meaning we are most likely done with the correction. Most likely. Again, you can see them here again. You can have them sideways as well, the three impulses. And in an uptrend, right? So you can have these three, one there. So I think we are close to a bottom here in this ratio, which later on, like a year, like a month or two, we hopefully are somewhere here and actually starting to do the outperforming the stage 2 uptrend in this ratio. This one is messy as it can get, basically. It's if we remove that, we have URNM divided by overall commodities, basically playing the range. So yeah, it's hugely range bound here. URNM divided by the spot price. We do that often. We don't want to go into a lot of detail on that one. URNM divided by XLE. Interesting in my view here. We have this bigger cup and handle, and we basically have a textbook wedge pattern. It's clear as day. And you can see we have some internal breakage here. So URNM is not there yet, but it looks like it really wants to start to do some major outperformance by the XLE. And of course, the bigger move comes up here. But again, early internal breakage within a handle slash flag. Again, I think that this one could be, again, down the road, a point where URNM will outperform energy big time if this plays out. A really clear pattern there. Here we have the spot price of uranium divided by nat gas. So again, very weird ratio, but we are at the upper end of that whole thing. We broke out, flagging, very deep flag, by the way. All the bigger supports didn't hold here. And where are we today? Again, you can still see we're stuck in the flag slash channel here. So until that changes, nat gas is outperforming, right? Because we're going down. But I think this could be something like that. So if that happens, and if this was a stock, you would be buying into that break above roughly 24 here, massively if we do that. Bottoming structure, flag break, stage 2 uptrend confirmed above the 30 weekly. That's a good setup. No matter the chart, the time frame, the sector, that is a really good thing in my view on a weekly time frame. So interesting. XLE divided by the SPX here. A bit of a dangerous, because we had the internal breakage here. So breaking out and basically back testing now. Maybe false breakout, maybe, but again, higher high, hopefully higher low. We can't lose that one there, otherwise we're actually going to puke somewhat big in XLE versus the SPX here. So again, long channel still in play, but it's getting a little bit dicey over here in my view. First Majestic divided by silver. This is 5 years worth of pain, 4 years actually. But again, we're close. Haven't we been breaking out? Not yet, but it is at a place where it can start to do the breakout. But we still need to see First Majestic outperform by roughly 15% or so against silver in order to, again, undo this whole downtrend here and start to make higher highs for the better part of a very long time, right? So basically, this could be that first high low. And then we have the squeeze going on here. So that is one to watch. That will be a good sign or like an indicator for the entire silver market and gold market, by the way. So good. What else have we here? The GDX divided by gold. Um, Gold has been fantastic, still is. Again, yes, we are in a short-term correction. But again, I've just moved the lines a little bit here, and we haven't broken out in favor of the GDX yet compared to gold. So we are not yet at a position where, let's say you have a lot of gold in like an ETF. You do not want to rotate all that stuff or half of it, whatever, into the miners just yet, if that is your plan. Because we basically need to take these highs here. You can see these highs here and the golden channel here. Until we break out from these guys, you don't want to do that. However, when we start to, from here, basically has gained 10% in favor of the miners, maybe 12. At that point in time, you might want to say, I've done so well in gold, but now I want to move over into the miners because they seem to be at a place where they can do outperformance against gold. I think gold will do fine during this period, but miners will do better, right? Interesting. We do not want to talk about the juniors. They are lagging. Silver miners, again, very weird, bottoming here. But it seems like to me, even though we had that little fakey there, breaking out now, back testing the top of the range. This is a breakout 2 attempt, back test, hopefully confirmed. And you can actually have a moment there where the silver miners, the big guys, are better than silver. And that is almost always in a place where silver goes up big time. Well, silver goes up, but the miners will do more. You don't have a situation where, let's say, the silver drops 20% and the miners will stand still, for instance, and therefore outperform by, 20, 25%. It will be in a good place for both of these guys. SILJ, no, we do not want to talk about that. Little interesting here, also a little bit iffy. Silver divided by the SPY, trying to break that 4-year range, excuse me, trend line here. A lot of, volatility going on here. Basically, still in a backtesting process. But again, we also want to see this one move somewhat quickly. So still early stuff here, not completely broken out. As you can see here, we have that is basically the ceiling. That's the big go-go, 0.056. Interesting if to see if that can break. So yeah, wouldn't it be nice to have silver outperform the SPY for a longer period of time? I wish I were a part of this back in the day here, but SPX divided by the HUI, the Huey, massive breakdown actually in favor of the HUI, the gold bug index. Broke on the 4th, back test rolling over. Trend is lost. 30 weekly moving down. The overall trend is down for this ratio in favor of the HUI. Very short term, yes, we most likely gonna see like little pullback here, but again, we are gonna see this yellow bad boy here getting hit in my view. So over the next, basically 2025, we should see this trend line getting hit at some point in time. And that is good, right? Gold mining index, the bug index is outperforming the SPY. That is actually not too shabby. Similar to the chart that we looked at on uranium divided by the USD, WTI, and in this case, gold. The gold miners are making a lot of money. Look at that. Again, they are basically printing cash like nothing else. And also, we are at the top of the range here. So let's see what happens here. But this was the initial spike in 2009, and then we had the peak in 11. And now we're here again with the first spike. This again is oil going to negative. You get basically this ratio goes to infinity. So yeah, very clean uptrend. You can see just basically the gold miners are becoming more and more profitable. So the trend is our friend until the end. And we shall see how high this can go. And if this trend line here is the top. Yeah, gold miners are looking really well. Again, high gold prices, low oil prices. That is a good sign. Oh, here it is, the scary dude. This is the 10-year divided by the 30-year. Again, maybe a little bit too big of a spread. Again, looking at too long distance between the years, but it is what it is. This, by the way, 2007. This is the dot-com bubble. This is the run-up, to the big COVID madness over here. And what do we have here? Guys, the 100% indicator is rolling over on a long-term time frame. This is not good. This is one of the biggest warning signs that we can have that, hey, something big is coming. Something big is coming. The last three times it was CV19. But in my view, again, now it comes to a little bit of a, uh, whatever it is. But again, to me, this is the repo banking crisis that was miraculously, anyway, this was the repo crisis. This was the 2007. This is the dot-com bubble. What will this name be? I like your answer. What will the cause be for this? I have my view. It again, I will say it as it is. I think it's the bond market showing that, hey, I am broken. We know it's broken, right? We can see that on different charts, and we've been talking about that for a long time. But at this point in time, it's going to be visible for the mainstream media, all these guys that, hey, it's broken, yada yada. But yeah, that is, until proven otherwise, extremely, extremely dangerous to look at. Aye, aye, aye. XLE divided by the SPY here, the energy sector divided by SPY. Um, by the way, this was a beautiful hit back in the day. Beautiful. Boom. Head and shoulders hit. Stage two breakout attempt here. Failed. We are below the 30 weekly. Very scary for the energy sector, actually, compared to the SPY. If this is a false breakout, we could be puking big here. Again, oil, again, going down due to the recent, this one here, again, recession, if not even worse, who knows? XLE divided by the XLF, the fan one. We're not going to talk about that. Here we're going to talk about the XLE, excuse me, the XLK, which is tech divided by XLE. Massive breakdown from the wedge. Now we're back testing. So that is interesting to see if this is the big low and we start to roll over there. So yeah, let's see here again. We're back above the 30 weekly, which gives this one some possibilities of actually undoing that whole thing there. Chemico, AG, Chemical and AG, that is First Majestic. Massive break here again, 2021 in favor of Chemical. Look at that. From 2 to 15 in the ratio. Wow. And now we're stuck in a range. So if we break down from here, that is stage 4, meaning First Majestic is better than Chemical. If we break to the upside, we will see continuation of performance by Chemical compared to AG. So when this ratio breaks either way, again, and if you want to invest into either of these, you should go into, again, this is going into First Majestic, and this is Chemical. And if you hold, let's say, Chemical now, and you break down, you want to swap to First Majestic. Ratios are fantastic. Apple divided by, looking at it long term here, URA, massive bear flag. If this breaks down, it will be death for this ratio for Apple compared to uranium in a very, very long time, if it breaks down. Again, you see these patterns where and then you bear flag, and then it's basically game over for a very long time. You can find it at the highs of, I think, Platinum 2020. You can see the exact same pattern. So if we break down, if tech will underperform heavily, the URA. However, a break to the upside out of the flag, you have the other thing, right? And this is basically our trend line. If we break down from here, the red, we go down to here. So that is a period where URA will outperform Apple. Oh, again, over the next half a year, if we break down to there. Platinum, silver, still this overall quite neat little wedge, and we're tingling here below. Uh, there will be a time where platinum will do better than silver. Not yet, but we could also see some big moves all of a sudden here if we can gain some grounding here. But I think first we will have a big spill where silver does something amazing and then snap back and then platinum, right? That's my thinking. Here we have the twos against the tens. This is probably a better one, a bit more clear. Let's remove all the stuff here. Same thing, guys. '07, repo, right? 2001. Yikes. And remember, we've also had the longest period of the inversion. Typically, you invert this one, by the way, but anyway. And the area, the height or the area between the zero line and the chart is by far bigger than anything we've ever seen. Again, I would love your comments. What do you think this is I know the bond market is broken, but what could this be? What could this be? What will the name be? Remember, COVID, the global financial crisis.com. The 1990s, I can't remember. It has a name. I can't remember. Oh, okay, good. Long term here, we have to zoom out a little bit, I guess, like that. Excuse me if this is too broad on the screen there, but big breakdown here, back testing as we speak. If this back test holds true, a lot of resistance here actually. Again, gold will outperform the Dow Jones by miles over the next long time. If we are lucky, in our case, being into commodities, again, the measured move from this one here, that momentum is roughly 3, right? Roughly 3, and we could even see the big golden fib if things get really out of hand. You can see here also we have that broadening structure like you've seen on many people been posting before. If we go all the way down to here, if we go, I'm not saying that we are because this is a bold statement, but we could, according to the broadening structure here, we are now at 12. We could see the ratio go down to sub 1 here, 0.5, meaning gold will be twice as expensive as as the one stock of whatever Dow Jones, whatever price that will be. But again, this will be 10 years from now, 15 even, depending. How did it do over here? I want to check the fib here just to see very briefly here. What did we hit there? We hit the 100% measured move. That is quite cool, right? So this to me, again, if we get a replica, we are at least going to 3-1. If we are at 12, I'll take that. To me, I'll take that. It's fine. It's absolutely fine. Cool. Cool one there. Platinum divided by gold. Soon, if you don't want to wait for a breakout in momentum or like a base breakout, and you want to basically buy into a lot of support in this ratio, you are going to want to, again, you can actually do this now. It doesn't really matter. Platinum is better than gold here, in my view here, from a risk reward point of view. Right here, volume is also kicking in. So yeah, interesting here. We have this whole blue channel here that we've been playing for the better part of 70 years, right? Wow, cool. Two more. SIL divided by URA. Big break here into resistance. What is that, guys? Again, that's the triangle that I like to call the triangle. Basically, the highest point of whatever fractal you have been drawing. That is the triangle. This is the triangle, right? This is a triangle high. Again, you can see we broke through, wiggle around, and then puke. So triangle highs, which is often just big pivot highs, all those, is to look for. And yeah, we did see some pushback here in favor of URA, but overall, we are in the stage 2 in favor of silver. We could back this down here, and everything will be fine still for the SIL divided by URA, looking long term. Silver divided by copper looks better for silver. Very messy chart because these, again, silver and copper is very erratic, right? But breakout, back test within a flag, trying to escape the gravity of that one there. But so far, so good. Silver is the better play compared to copper. Copper took a big hit today and yesterday. And I believe we could get all the way up to these guys here. We are at 7 now. We could see 10, right, in favor of silver, meaning you're getting 50% more or less, 40% silver to outperform copper. This one we will not look at. We have basically looked at it before. So long video. Again, ratios that I just look at from time to time. Some of them are very weird, but I've had them for so long that they feel like home to me. So again, with regarding to, and I would love your thoughts, views. Let's have a discussion. If I can find it, here it is. What do you make of this? Again, I've set my views. It's going to be nasty, doesn't it? Again, the whole inversion thing here. I think it's going to be nasty. And we can actually do the US 10-year divided by US 0. There it is. And we get the one that everyone is using, right? So let's remove all that. We don't want log scale because it's so insane to look at. There it is. So horizontal line at the 0, boom, there it is. Good. This again, 1990s. I can't remember the exact word for what it is, what the name was. This little bleep here, the dot-com bubble. This little bleep here, global financial crisis. This little, very briefly, bloop, bloop, that was, COVID. What is that? So deep and so wide. The area, if you was doing like an integral here, is 4 times as big as the largest one here. Again, I might be seeing ghosts, but this is critical in my view. I would love to know your thoughts, guys. Cheers.